The top 5 tax hacks that will help real estate investors pay less tax even if they are making over $250,000 a year. Now, as real estate investors make more money, their tax strategy becomes more complex. You have some investors who are, they fear the IRS and they are scared to get these huge tax bills, so they delay filing their tax returns. And then you have other investors that just, procrastinate to file their tax returns because they're still trying to figure out what other strategies that they can take advantage of to pay less tax. Don't worry, I get it. I understand. We're all human. Some of us can fear getting these huge tax bills, and most of us don't even like paying taxes. I know I don't like paying taxes. I love to help my clients save on taxes and pay the least in taxes, but I don't like to pay taxes, which is why I'm going to let you guys in on the top 5 tax hacks that you can take advantage of that will lower your taxable income and help you maximize your wealth. By the way, my name is Nikki Burns, and I help 6-figure multifamily buy and hold investors save $50,000 in taxes and maximize their cash flow with my teaching methodology called the Wealth Method. And before we get started, you know the drill. Hit that like button and subscribe to my channel so we can help other real estate investors find this video and they can be prepared come tax time. Now let's dive in. Now the first hack is depreciation. Depreciation is one of your best friends because the IRS allows real estate investors to write off the normal wear and tear of the property's value over time. Now you have the option to taking the bonus depreciation for any capital improvements that you make on your properties. Now for 2023, the bonus depreciation has been reduced to 80% as opposed to 2022 when it was 100%. Hack number 2, 1031 exchange. If you don't want to pay capital gains tax on a property that you sell, you can defer those profits by investing the profits into a like-kind property. However, there are stipulations and requirements that you have to meet to claim this deduction, but that'll be discussed for another video. Hack number 3, rental losses. Rental losses. The bad news is you have a loss. The good news is strike a pose. Deduction. The IRS allows you to write off up to $25,000 of your rental losses on your tax return, and that amount that you get to write off is dependent upon your filing status. Now moving on to hack number 4, and that is energy credits. Not only are you saving the planet, you're also saving money. Investors making energy efficient improvements on the properties can claim $1,200 for property costs and $2,000 per qualified heat pump, biomass stoves, or boilers. Moving on to hack number 5. Hack number 5 is mileage. Now mileage is another one of your best friends because the IRS will allow you to write off the actual cost or the actual mileage that you are using on your vehicles to travel to and from your rental property locations. Now, depending on which method you use, you want to do a comparison analysis to see, okay, what are your actual costs? And then you would compare that to the actual mileage that you used on the vehicle and multiply that by the mileage rate deduction that the IRS gives you. Now, if you found value in this video and you want a roadmap to help you stay ahead of your finances, then book a call with me and I will see you guys on the next video.